Morning, everyone. You all know that we are going towards accountancy subject over here. So, till now we have discussed many of the concepts over here. Third chapter we are dealing with recording of the transactions. In that we saw the previous illustration where we are looking forward on the accounting equation. In accounting equation, how we see how the assets how the assets are equal to liability plus capital. On this basis equation, we are running over this problem. That is what the illustration we are solving out the illustration. Till here, this point, seventh point, we have ended over. And even I have given in the description how the transaction get affected, that we have been told over there. So before going to the description part, the narration, easily you can understand the upside, whatever the things are there. Just like goods costing rupees 80,000 was sold to rupees 1,25,000. So most probably you are getting a profit of what amount you are getting a profit here? 45,000 you are getting a profit. That profit you are, where you are shifting this profit? Directly to the capital. That is what 45,000 you can see there. And in the inventory is the stock. Out of the stock 1,20,000 stock you were having the balance amount over here, then that same you are going to reduce it. So out of that totally 1,20,000, out of that what you are going to do over here, you are reducing it and taking over how much it is, 40,000. The stock balance is only 14,000. And whatever you have seen in the slide, or how we have passed the things, in that we are getting assets increase, just like the debtors. We have increased with our debtors. How much debtors are being increased? 1,25,000 over here. So why we got the debtors here? Our goods, we have sold it on a credit basis. It is not a cash transaction, it is credit transaction. That is what in future, in the future means you can go through 115 days, 1 month or 3 month, in short period of time you are going to receive the amount. So we have taken over there as a debtors here. Then let's see the next point, next illustration. Now see, check issued to the suppliers of goods worth rupees 35,000. What it means here? See, whatever your goods you have taken over here means you were purchasing the goods. Just like I will mention here, you have purchased nearly creditors. How much creditors you are having over till now? If you see from the liabilities, the creditors are nearly 3,20,000 creditors are there. Means this much amount you have to pay still. Why? Because you have purchased many of the goods on credit. You have not paid them. That you are passing a check means you are reducing the bank amount. That is what bank, in bank how much balance you are having? 5 lakhs. 5 lakhs balance you are having in the bank. In that bank you are paying 35,000 check means this 35,000 will be reduced. Now remained amount is how much here? 4,65,000 you have remained. This is the balance. And in the credit you are reducing this means 35,000 you are paying. Okay, then what will be the balance there? 2,85,000. You can see the balance over here. Now this is the balance amount of the liabilities. Liabilities means under the liabilities we get the creditors. Why we get the creditors? We have purchased the goods on the credit basis. We have not paid them. In future we are going to pay means this is what the, when you issue checks to the suppliers, that is what the thing over here. So for this individually we are taking the transactions entry. When we will be having over at one balance sheet only, if we are taking, we can understand that all the things. I would have used the bold, but I need to specify you on this screen only. Why? Because it takes a whole bold, and even we need to repeat all the questions and all. One by one the questions are being taken, and addition of that and subtraction of that, that is what the subtraction part is in taken over here. So you can see that we are not having any of the drawbacks over here. So you can understand that how much cash balance you are having, 1,65,000. Inventories balance, the last you reduced, out of that 1,20,000 you reduce 80,000. So balance is how much over here? 40,000. Then plant and machinery you are having 3 lakhs. Then bank balance you are having 5 lakhs in your bank balance. That is what out of that somewhere 8 lakhs we took here amount, whatever the amount is there, balance to the bank. So out of that now you have passed the check, means you are going to reduce that asset. That is what the thing taken over here. Then liabilities you are paying, means even you get the reduction of your liabilities. That is what the creditors, you got less the creditors over here. Then next part. Here, one more check received. Now, this is the check received. You have received the check. I will erase this creditors. The check you have received. You have received the check, means how it will be taken over here? Means you were having the debitors. I will mention here debtors. Debtors were how much for you all? Previously, 1,25,000 debtors were there. In that you are receiving how much? 75,000, means in the bank the check has been received, means out of this 75,000 in the balance you can add up in this amount. If you add, this will be 5,40,000 now. Okay, then out of these debtors you are going to reduce this 75, means now how much is the balance over here? 50,000. See the things which are there, I have shown you all in the slide also. So you have to just understand that how the things are going to be taking place over here. This is the ninth point of the illustration, where we are seeing we have received a check. When you are receiving, means it is your payment is been made by the debtor. When you are paying, means you are paying for the creditors. That is one of the point you should know over here. Then next one, I think so this is the last point, withdrawal. See one more thing now, how it is there. See, withdraw by owner for personal use. Now personal use he is withdrawing, means how much capital he has invested. The person capital investment is how much over here? Now totally with including the profit is having nearly 9 lakh 10,000. 9 lakh 10,000 he is having there. Okay, how much? 9 lakh 10,000 from capital part. In capital he is having 9 lakh 10,000. He is using how much rupees here? 25,000 for personal use, means he is reducing his liability in the business. He is reducing his liability or the portion or share of his capital from the business over here. Okay, so here after this you will be having the capital 8 lakh 85,000. Yes, 85,000. This is a balance of capital. Now this will be the balance over capital. Then how he has taken? There we have not shown any of the things over here, cash or check. It is not there, means obviously you will be considering it as a cash. In that cash, how much you are having balance over here? 1,65,000 you are having the cash balance. Out of that remove 25, means 1,40,000 you are balance amount is remained. That's it. So here when you get tally both side, the answer is been there. The tally answer is 11,95,000. Just this will be the total balance about it. I think only 10 points are there. Yes, only 10 points are there. Till here we end over with the illustration problem here. So now after this, the main concept what we are going to see over here is books of original entry. Now what is this books of original entry we are going to discuss over here? See, most probably when you start up with the business, when you are making the transactions over here, now where you record the transaction? The question is where you record the transaction. See, in the slide you can see all the details. I have not made any of the shortcuts or short notes over that. I have taken whole of the concept of the books of original entry. Why? I will tell you the reason. I would have taken it in a point wise also and just highlight over you that so and so things are there. In oral also I can tell you the books of accounts which the most probably when the business starts, and the first books of account which you maintain is nothing but the journal account. First, you will be writing all the transactions over journal account. Then you will be posting them to the individual ledger accounts. This is the thing. So personally, you need to know. In the next slide, see here. First, you are going to make a proper journal account. Then you the cash book and other books. What you are going to see over here. Wherever you make the individual ledger accounts, you are going to make in further sessions we are going to discuss about it. Now most probably what we are going to discuss here is books of original entry. Now what this original entry means and what are the books of original entry? See, when you are making the transaction, where you are going to record the transaction, this is the main important point to be discussed over here. So where you are going to make the entries first, here you can see first, real accounting system do not record transaction directly to the accounts. One thing, whatever the accounts transaction what we took over here, directly you are not going to enter it in the balance sheet. Just like this is the balance sheet, okay, in this balance sheet directly you are not going to record all the transaction. This is what liability and capital, then amount, then assets, then amount. Here directly you are not going to start over entering all the transactions in this. You are not going to enter. It has certain procedure. First, where you are going to enter the the transactions of the business, right? Where you are going to maintain. This is last step where you will be recording all the transaction. This is last step. Remember this. This will be the last step where you will be recording the transactions. Before that, we will be having journal entries, then nextly we will be having the posting of that, posting to the ledgers. Okay, after that, again in detail when we go over here, we may remove the ledger, separate individual ledger accounts we will be removing. Then if we move forward, we will be having trading profit and loss account over here for the businesses, then the balance sheet. Many of the steps are there. Let's go one by one. So this is what the overall picture, what I am showing you all. Directly we are not going to record here in the balance sheet. Till now we have discussed about the balance sheet. What on the basis of equation, most probably not the balance sheet, the equation we had discussed. What was the equation? Assets are always equal to liabilities plus capital, right? This was the equation. This is accounting equation. In this accounting equation we have discussed all the points. That in the same way I have shown you the balance sheet, how the balance sheet is being prepared. Then nextly, how the deduction and the addition on the basis of the rules of the debit and credit, the golden rules of the debit and credit word, we have discussed and saw these previous entries, how we make the allotment here. Yes, that is what we have seen over here. Till now, this much things are got over. Now, specifically, what we are going to know is how the books of original entry we make over here. These things we are going to know. Directly, you can't make any of the entries in this balance sheet. The first step, you are going to go with the journal accounts. How the journal accounts, you are going to pass the journal entries, we are going to discuss further. So let's move with that original books of account. I will erase this. See, you can see here, real account system do not record transaction directly in the accounts. The book in which the transaction is recorded for the first time is called journal. What I told you, the first account where you will be recording the transactions is none other than the journal. This is what the journal, or this, even we call this journal as a books of original entry. Now whatever the transaction you have taken over, you will be passing the journal entries. Same in the next few slides, you will be coming across with the journal account, how you pass the journal entries and how we are going to record it, that we are going to see here. So this is what the books in which the transaction is recorded for the first time is none other than the journal or books of original entry. That's it. So yeah, then the source document, as discussed earlier, is required to record the transaction in the journal. Now whatever till now what we have discussed, the rules of the debit and credit as well as the equation where we record, we make that debtor creditor word, debit credit word, the same we are going to make over here in the journal entries. What all things you mention, just I will have a normal rough diagram over here. Here you are going to record the date first, okay, then particulars means the transactions, how you are going to record your particulars. Then you will be having ledger folio, then debit amount, and next credit amount. So this, in this way you will be having the journal account, you will be having in such this way. Here you are going to pass the journal entries. This I will show you in the next. Let's discuss first in detail, then we will go for that. See, here you can see, discussed earlier, this practice provides a complete record of the each transaction in one place and links with the debit and credit for the each transaction. Now whatever the transactions you have taken place, that we will be placing you. Here you will be adding one amount and here you will be having one amount. What is debtor side, you will be maintaining here debit, and what is credit, you are going to maintain here the things. So let's go forward. After the debits and credit of each transactions are entered in the journal, they are transferred to the individual accounts. Obviously, when you will be recording these transactions, after that the individual accounts are being opened. What are that individual accounts, we are going to see. Now let's go move forward here. See, the process of recording transaction in journal is called journalizing. What we call these records, what we maintain here, this is what journal specifically we are talking. Now whatever we record in this recording, the process of recording the transactions in journal, we call it as a journalizing. Means we are giving the description over here of the transaction. In that we are going to give the narrations. In that narration you are going to say that what amount you have received, what amount you have made the expenditure, whatever, if it is paid or received, all the narration you will be giving over here. You will understand just by moving forward one by one, idea you will get from the next slides. See, once the journalizing process is completed, the journal entry provides a complete and useful description of the events effect on the organization. Once all the details you will get from here, in that how the transactions are recorded, when the transaction, the narration is been given, all the how it is useful, all the complete description is given over here. The next, the process of transferring journal entry to the individual account is posting. That is what, after this, when you pass the journal entry over here, you post it to the ledger accounts. That is what you will come to know, where you are going to post it. See, that we call the same description where what you will be passing journal entries, that will be individually carried, individual accounts you are going to pass it. How and where you are going to pass, I will show you here. This sequence causes the journal to be called as a books of original. That is what this journal is called, book of original entry. Specifically, what this book of original entry, what we are discussing, is none other than the journal. That's it. So you are going to know. Then the ledger account as the principal book. Then now next, as I told you, the word came over here. The ledger account is none other than the individual account. This ledger account, what we are calling ledger account, is individual account over here. This ledger account is individual account. whatever you are passing the journal entry descriptive way, description you are giving over here, that individual accounts are been opened. Ledger accounts individually you are going to open it. See here, in this context, we should note that one, on the account of the numbers and commonality of the most transactions, the journal entry is subdivided into number of books of original entry. Now, most probably few of the entries whatever we are having over here, most of the journal entries are subdivided in what? Journal proper, then cash book, then other day books. Now see, most probably this journal entry what you are going to pass is the main part. In that it is divided, subdivided. Journal proper, the first point you can see there, journal proper, then cash book, what cash transactions take over you are going to maintain in the cash book. Just like you have received, same like in the previous session question what it was, you received a check of how much rupees, or directly I will say received a cash of on sale of goods. How much rupees? Let's consider rupees 35,000. Now this cash amount you are going to record in the cash book. This is what one of the trick you need to know. Then other day books. Now day books means what? How much you have purchased, that you are going to pass a purchases journal book, then sales journal book. Then if you have purchased any of the goods and if you are returning that goods due to the damage or excess goods, that may be the reason. Due to the most probably the damage of the goods, that time you will be returning them. Then if you have sold the goods and if due to the damage or any of the other problem, if you are receiving that, these journal accounts you have to maintain. Then bills receivable, whatever the amounts you are going to receive, and bills payable, whatever you are going to pay over here, bills payable. These things, day to day transactions, you are going to record in this individuals. That is what subdivided into number of books. Journal entries are divided here over here. Specifically, this is the main journal account where you are dividing over here. And here, most probably, I will remind you in the last note I have written. In this chapter, you are going to learn the journalizing and the posting into ledgers. In the next chapter, cash book and the other books are dealt in detail. Whatever the things are there, cash book and all the transaction, the same recording of transaction we are having second part in the fourth chapter. There you will be looking over all the details of this. Till now what you are going to deal is this concept. Journalizing you are going to learn in detail and posting into ledgers. Now this posting individually you are going to pass it in a cash account. This is what cash account you are going to pass it, and even in the sales account, right? These are the things you are going to know in detail. Now where you are passing the journal entries and where you are posting the journal entries, you are going to know from this chapter. Now we are having much more wide chapter, we are going to discuss more about it. This is a big chapter. As per the, if you think about the exam point of view, if you do these 4 chapters, you are completely passed from this examination. That is what one of the thing is there. From the 3rd and 4th chapter, most probably the questions will come from this 2 chapters. Most important these chapters are. 3rd and 4th chapter are more important as compared to the other. Most of the questions come from this only. And in journal, you are going to get 14 marks question over here. So you are going to be perfect in this journalizing or journal entries. That is what I'm telling you in advance. See, we have not discussing this all the books detail. Purchase books means what? Whatever the purchase you have made the goods purchase, like raw material purchase, that things will be recorded. Purchase of machinery, all the transaction, whatever you are purchasing the goods or the any of the assets, that you will be recording over there. Then sell of the goods, that you are going to record. We are not going in detail of that. Okay, that is what the part, just a normal part you are going to know in general. In detail you are going to see in further classes. See here, let's see what is this journal. See, as I have drawn over here, First you can see the date, the next you can see over here the particulars what you are going to record over here, the journal entries over here. Then this is a ledger folio, then debit amount and credit amount over here. So these are the things we are seeing here, the format of journals, how we are going to record the journal accounts over here. Then one more thing, let's have some discussion about the journals. See, this is the basic books of original entry. Obviously this is the basic books which we are going to record in the recording the transactions over here of the business. Then in this book transactions are recorded in the chronological order as per the date wise, how you are going to record the transactions over here in the chronological order, how the date wise you are going to record it as and when they take place. Now on 1st January 2017 one of the transaction is taken, then 13th January 2017, then 8th January 2017. Now first transaction will be recorded this, second, third. This is what chronological order. However you are making, it should be in this way, it should not go up and down. मतलब ये पहले ये हो गया तो डायरेक्टली ये लूंगा उसके बाद ये लूंगा, नहीं, इसका कैसे है, सिक्वेंशुअल में लेना ही पड़ेगा, जैसे कि क्रोनोलॉजिकल ऑर्डर बोलते हैं हम लोग. When they take place, that time you only you are going to record it. Then afterwards transactions from the this book are been posted to the respective account. The same, this when you complete this journalizing, that will be posted in the particular individual accounts over here. Then next, each transaction is separately recorded after determining the particular accounts. The same, in the particular account you are going to determine it is a debit or credit. Okay, then it will be determined amount to be debited or credited. This format of journalizing shows, this format shows you what you, this is showing you how you are going to record. That is what 1st Jan 2017 what transaction took place, then what is this ledger folio, you will come to know over here. See, in this the first column is the date, that is what date you are going to write, on which day the transaction took place, right? In the particular column account detail is been debited, returned to the first line and beginning on the left side, this is what left side, and the corner, that is what debit, this corner left side, this is what one of the corner you are writing here, the first journal entry you are writing here in the left side, this here you are going to show that debit. The next entry when we take, you will understand over here. Then this is what in normal dr is been written, wholly we don't write, this is dr, this is cr, dr means debit, cr means credit, that is what is been end of the column, that is what end of the column you are writing over here. Then the account title is credited with the return on the second line, leaving sufficient margin, that is what after this sufficient, leave this margin and write over here the credit also over here left side. Then 2, prefix 2, now after this you are going to write 2, how I will show you a picture here. See, purchase account data, here I will write here purchase account data to Govind traders account. So whatever the amount is that 30,000, just like this you are going to make the, see here their prefix is been told to whom, Govind traders over here. Below the title you are going to write the narration, even the narration is been given over here. See, purchase of goods in trade from Govind traders, that is what the narration also is been given, that we call the word I have highlighted over there with the red font, it has been given over there, we are going to write over here the narration. Then next, return having written the narration in the line below the particular column, which indicates the end of the recording specific journal entry. Now, when you write this particularly purchase account data to Govind Traders account, these are the purchase account you are going to show individually in the ledger. Now, ledger, when you are making the ledger account in this way, you are going to maintain this account. This is what debtor side, this is what credit side. In this way, you are going to open the ledger accounts for this. Purchase ledger individual is account is different. Govind Traders individual account is different. That is the further studies what we are going to do. This in detail we are going to study further. First, just concentrate on this. How we are going to pass the journal entries over here. This is the further concept. After this journalizing concept, you are going to go for the ledger accounts. That it is not needed at present to tell you in detail. You will come to know one by one concept. We are not going to discuss whole concept at one time. We are going to discuss only concentrate on this part, journal. Why? Because you are going to get 14-mark question here. This is one of the important part from the exam point of view. Okay, so concentrate on this part first. Then next see further. See, narration down there. When indicates the end of the transaction, then column relating to the ledger folio records the page number of the ledger. Now, what is this? Ledger folio means when you are maintaining in the books of account, it has certain number. Which number? This transaction is been 12th number or 25th number. That number you are going to write over here. Why? Because the transactions whichever the business contains are in huge quantity. It is not one or two transactions. You will be having lots of transactions over here in the business, just like paying the wages to the expenses whatever you are going to get over, or purchases or sales or any of the commissions. Many of the things are there over here. Expenses daily, like electricity expenses you have paid, the wages you have paid, the daily day-to-day transactions which take place, that you are going to maintain over here. So it will be in the chronological order. And one thing, in the ledger folio, the transactions are more, that time you are going to give them the number. There it has been told there. The column of relating to ledger folio records the page number of the ledger. On which page you have written this transaction. And on the page number 12, 25 or 55, whatever. In this way, you are going to make the ledger folio over here. Then record page number here. Then this column is filled with the time of posting and not at the time of making journal entry. Now, when you are making this, after passing this journal entry, when you mention this in the journal ledger account further, that time you are going to make. And just while you are passing this journal entry, you are not going to make this. So even this point you have to remember. What is this ledger folio? One of the question, if anyone asks, that you need to remember this point. You can note down this point. Whatever I have highlighted with black fonts, that is what important part over here. You need to remember this. When I will be teaching, or when I will be passing out the journal, from where it came, why it came, you should not have any of the queries over there. You are going to know just the part. This is what the narration we are going to write over here, that just by passing out the journal entries over here. That is one of the part you have to remember here. Then let's see the last end part. The journal entry is the basic record of business transaction. That is what the basic need. This is basic recording need it is. Then it may be simple and compound when only two accounts are involved to record a transaction. When only two accounts are there. Now this is what only two accounts are there. It is very simple. It involves what it is when only two accounts are involved to record the transaction. It is called as simple journal entry. This is what simple journal entry. Even few of the complicated things are there. There you will be having the working notes, adjustments over here. In detail, it is not at present. At this stage, you are having just the normal format over here. In detail, you will be dealing with this further. It will be a complicated things. For one journal entry, you may get required to open a working note for them. That is what in the second year you will face these problems. These complicated situations will come in the second year of your PUC, not at a first stage. Let's move with this concept. I think last 5 minutes I have remained. I will highlight this one of the example, and then I will end this today's session over here. See, let's see. Goods purchased on credit. How much goods you have purchased on credit? 30,000 rupees. You have purchased goods. 30,000 you have purchased the goods, and from Mr. Govind Traders on 24th December, on 24th December 2017, 24th December 2017 you have purchased goods on credit. Involves only two accounts. Just obviously this involves only two accounts. Which are the two accounts? That, see, here I have told you, when only two accounts are involved, it is a simple journal entry. Remember this. When there are only two transactions, we call that transaction as a simple journal entry. You need to know only two transactions are taken over here. In this, you are going to see the purchase account is what? Goods you have purchased, and second one is Govind Traders, that you thought creditor over here. Remember these things. Then this transaction is recorded as follows. See, here you can see here. What is the year here? This 2017, 2017, 24th December. In this way, you are going to maintain the dates here. Then particular. In particular, what you have taken here? You have purchased the goods. Purchase account data to Govind Traders account. Then now only two accounts are being affected here. So this is what? Simple journal entry. What it is? Simple journal entry. Remember this point. Then narration. What it is? Purchase of goods. Purchase of goods in trade from Govind Traders. That's it. This is what the narration over here. Then here it is debited, and here it is debit amount, credit amount. It has been done. Just for this journal entry we call simple journal entry. For this we are calling simple journal entry. That's it. You can see over here. This is a simple journal entry. Only two accounts are involved. Remember this point. Next, even here. See, now this is what? One got simple journal entry. This is another one. Office furniture is been purchased from Modern Furnitures. That is one of the this one shop name. That is what? Modern Furnitures on July 4, 2017, 25,000, and rupees 5 is been paid in cash immediately, and balance is still payable. It increase furniture assets. You are increasing the assets, furniture assets by 25,000, decrease cash by 5,000, and increase liability by rupees 20,000. So this is what compound. This is what complicated thing. This you got only two involved two accounts means this is a simple journal entry. Now this is what complicated entry you can see over here. Now even we can make over here, or else you can just go through that. Why? Because I may get disconnected due to the insufficient time. If I get disconnected, just remember these points. See here, I will write over here. On which 4th July, I will write over here 2017, 4th July. The transaction took place. What is the transaction? Office furniture. Office furniture. Account data. That is what? Office furniture. You got it at 25,000. Then in that you have taken to cash account. From cash, how much you have taken? 5,000. And remaining will be the modern furniture account. Modern furniture account in the 25,000. This is what your liability. What is your liability over here?